What's going on? It's your boy, the official GoGetter. I'm coming at you guys back with another video. Today, we're going to be talking about where I would invest my $100, my first $100. So if you're somebody looking to start getting into investing, but you feel like you're overwhelmed and you need to start big, you're wrong. And I'm going to show you guys how to start with just $100. And this is how I started and where to make your first investment and why you should make your first investment here. These videos lead up to this video that I'm making today, right now. So I have a playlist. It's a public playlist with all the videos on them. I suggest you guys watch them, do your due diligence, because I do not believe in starting at level 3 when you're really at level 1. So, for the people looking for quick gains or looking to just get started quick, I'm sure you guys are gonna watch this video and just jump straight into it. But for the people who actually want to learn what the stock market is, why it's important, and what's going on in our economy to make sure that you have to invest, go back and watch those previous videos, right? First, we're going to start with, you start small, but you have to start now, right? Most people, they want to wait and they want to save up a certain amount of money before they start investing. And honestly, people get so caught up with saving nowadays that we don't even understand how to invest. You can save your way to $5,000, $1,000, whatever it is, but how can you invest your way to $1,000 and put your money in the right things that are going to give you a return? Because this is a skill. So starting with $100 might seem small, but it's a huge step towards building wealth. The earlier you start, the more time your money has to grow through compounding. $100 might not seem like much, but it's not about how much you start with. It's just about starting. If you invest $100 into something like VOO, right, which is an ETF, which tracks the 500 largest companies in the U.S., that $100 doesn't just sit there like it would in a shoebox, like you're saving your money, right? It's gonna grow, right? So honestly, we can use this as an example. We understand the concept of saving some money and putting it in a shoebox to save it over time, right? But this is how investing works. What if you put your $100 in that shoebox, but each time you come back, that $100 has grown, right? So it grew a few percentages. Now it's $102, or it's 105, or it's $110, right? Whatever it is, if you leave your money in there for a certain period of time, it's gonna grow, right? You're not just leaving your money in the shoebox and it's not being stagnant. Imagine your money in the shoebox multiplying and growing, almost like creating new kids or something. You know what I mean? It's moving. There's action. So that's what's important. That's a good concept to break this down. So at an average return of 10% per year, your $100 would grow to $259 in 10 years. That's 2.5 times your initial investment, and you didn't have to do anything but let your money work for you. That is the power of getting started. It's not about being perfect or having thousands of dollars. If you invest $100 every month, you can have almost $20,000 in 10 years. Starting small is better than not starting at all. Time is your biggest asset as an investor. The S&P 500 breaks down is a makeup of all the 500 companies, the top 500 companies on the stock market, right? So it grows slowly over time, and that's why it's a safer investment. So at an average return of 10% a year, your money is going to grow on an average 27%. Year to date is the last 10 months, 11 months. In the last year, we're up 32%. If you left your $100 in there, just $100, by the end of this year, you would have $133 if you left it in the shoebox and forgot about it, right? That's the power of investing. And like I said, this says 10% over the year, but really 10% is on a low scale. You don't have to do these numbers with $100 per month, right? You could do $500. And then also, I'm also only showing you guys the percentage of what your money could be if you only held it there, right? If you held it there for 10 years and it grew at 10%, that's only what this is showing you. Realistically, you're not going to do that. Realistically, you're going to invest money over time. So this number is going to be first. This $259 is going to be way bigger in 10 years if you just left $100 there and did nothing, but you're not going to do that, right? On top of that, and then this 10% number, this is a low scale. Truly do your research. You can gain more than 10% by investing in the right companies and making the right plays, right? This is just slow growth, slow investment per se, but starting small is better than not starting at all. Like I said, time is your biggest asset as an investor, so that's why it's important to start small. You know, you're starting small. It's about making a habit, man. I started my investments, I think, what, less than $100, just so I can make the habit. I was eager to. Most people are eager to make the money so quickly, but I was eager to just be an investor and learn so quickly. With working on your skills and growing your knowledge, eventually that money is going to come if you figure out what it is that you're supposed to be doing, right, consistently, the right way, and just getting your foot into the water. So this is why I suggest, even though you got a small amount, put your money in somewhere and invest in, and get the knowledge and get the experience, right? Because that's going to change everything for you. Why VOO is a smart investment, that's what we're going to get into next, right? So VOO is an exchange traded fund, an ETF, and it tracks the S&P 500, which includes the 500 largest companies. VOO stands for Vanguard S&P 500 ETF. So Vanguard is the fund that has made this ETF for us. So they're like Vanguard is a company. Vanguard is an institution, right? But we're not investing into the institution. We're investing into what the institution created for us to invest in, which is the ETF, right? So when you invest into VOO, you're buying a piece of all these companies at once. If we come here and we look, right? So these are the sectors. Sectors is technology, healthcare, communication services, all these different sectors. Sectors is where each company belongs in. It's a category each company belongs in. Apple belongs in the technology sector. Nvidia belongs in the technology sector. Amazon belongs in the consumer cyclical sector, technology sector, right? So that's what a sector is. So if you look, right, if you put your money into VOO, right, you're having a percentage of Apple, Nvidia, Microsoft, Amazon, Meta, like, so you're having a percentage of all the top companies. That's why it's important. This is why I suggest doing it for the first investment, because you're getting, you're not, it's not as risky. It's a low risk way, because you're putting your money somewhere where it's going to grow slowly over time, but it's not going to be as volatile. Meaning you're not going to see yourself make a lot of money, but you're not going to see yourself lose a lot of money. But you're going to see yourself make a lot of money over time if you hold, right? So an ETF is a slow, low risk investment, right? I always suggest having an ETF in your portfolio, because you always get exposure to the market, right? So no matter what, if you have ETF in your portfolio and you have 3 other companies, and say you got 2 companies that are down and losing money that week, your ETF is growing and it's making you money because it's broader. It's not just catered to a few stocks that are in your portfolio. That's why it's more secure. That's why I suggest it as the first. And this is why I put my money first here, because you get exposure to everything. Because when you first want to start investing, you want to look at Apple, Amazon, Tesla, Google, right? You want to look at all these things because you see how much money they're making and you feel like you're left out. We call it FOMO, the fear of missing out, right? You want to get in tune with these companies so much, but if you were to just put your money into the ETF, that gets you in tune with those companies no matter what, because you're not holding them individually. You have broader exposure. So when you invest into VOO ETF, you are investing into a ready-made portfolio of companies built for diversification. This can be for the entire market or for specific sectors. When you invest into VOO, you're buying a piece of all these companies at once. So what are the benefits? Like I just talked about, diversification. Your risk is spread across 500 companies, right? That's the first benefit. Second benefit, you got low fees. So VOO's expense ratio is just 0.03%. So nearly all your money stays invested. So ETFs and funds, they'll have an expense ratio for you, for allowing you to invest, or for them controlling the fund and making sure everything in the fund is organized. They'll have an expense ratio, but this expense ratio is 0.03%. So if you have $100 in there, if you place $100 in there, they're only going to take 3% or 3 cents, right? So nearly all your money stays invested. Strong performance historically, the S&P 500 has delivered an average return of about 10%. Whoa, sorry. Strong performance. Historically, the S&P 500 has delivered an average return of about 10% per year, right? So it has a strong track record. You see that it performs strong historically. VOO is a simple, low-risk way to invest in some of the best companies in the United States, like I talked about before. So it's an easy way to get started into investing, especially for somebody who doesn't know too much about the stock market, right? Because your risk is spread across 500 companies, right? Historically, the S&P 500 has delivered an average return about 10%, right? It's a low risk way to invest in some of the best companies. So that's why, for somebody who doesn't understand the stock market and just getting started in investing, right, I suggest this is your first investment, because you don't have to go do a whole bunch of research. The research is done for you, right? You don't have to consistently monitor your stocks and monitor a certain company, because everything is already done for you. You're already diversified. All you have to do is set your money in here and forget it. So next, we're going to move into the platform that we're going to use, which is going to be Robinhood. Right, Robinhood is the platform that I use. Why Robinhood is perfect for beginners. Robinhood makes investing easy and it's accessible. Why? Because they have fractional shares. So you can invest any amount, even if a stock or ETF is expensive. So let's touch on that, for example. What is a fractional share? So right now we're going to put our money into the VOO, the Vanguard, right? But for a full share of that, it's $550, correct? But we're going to put $100, which gives us a fraction of that $550. So it's not the full amount, right? But you still are able to invest. That's what Robinhood gives you the opportunity to do. You can still make money without investing the full amount. So if you're not somebody who wants to put $500 in just yet, and you're starting with $100, just like I'm making this video about, we put our $100 into here on this platform. Go to the App Store, go online, download Robinhood, make you an account for Robinhood, put you $100 in there, and then you look up VOO on Robinhood. Here's the home screen. This is what it should look like when you have your $100 in here. You look up VOO, boom, you hit enter, or you click that, right? You want to click the one that just says VOO, Vanguard S&P 500 ETF. It's worth $550, but we're going to put $100 in there. That's a fractional share. Not all platforms allow you to do that, but Robinhood allows you to do that. You get no fees in Robinhood, right? So that's the second thing that's good about them. Your entire $100 goes into your investment, not commissions or extra charges, right? So some companies and some platforms, they'll take commissions, right? So they'll take a certain percentage to put your money into the platform and make an investment. So say it was another company, they may take a few cents or $1, whatever it is. Robinhood, they don't take any fees from you. When you invest your money is there and it stays. It's a simple design. That's the third thing that's good about Robinhood. That's what I enjoy most about it, and show it, and I emphasize it to beginners. If you look, this is a simple design, almost made like a game, right? It's a blessing. And also can be a curse, right? It's a positive and can be a negative, because me starting off as an investor, it was appealing and made things easier, right? But as you keep getting deeper into investing and you build your skills and you invest more money, you notice that Robinhood, the platform, is almost like gambling, and how they make it look so much like a game to the point where you don't take it as serious, right? So eventually down the line, I'll introduce some other platforms, and I just started using E-Trade, which is another platform, but these other platforms don't allow you to get into fractional shares, right? So that's why I didn't suggest that. That's why I suggest Robinhood, and Robinhood is not a bad platform at all, right? But just at some point when you get experience and become an experienced investor, we will have to upgrade, because even though it's appealing, we want something that we can take more serious, right? But if it works for you, it works for you. Not everybody feels that way. This personally, that's just how I felt, right? So personally, I began investing on Robinhood. It's easy to understand. It makes investing look appealing, and it's a great place to start to understand the basics. Robinhood is perfect if you're new to investing and you want to start small. And this is exactly what is made for the people who are new to investing and they want to start small. Download Robinhood, put your money into here, right? Look at VOO. And honestly, we'll buy it right now, right? So this is how you do it. Once again, we'll start from the beginning. Put your money into Robinhood, right? You hit the buying power, and you hit deposit funds, and you can deposit funds from whatever account you got, connect your account, transfer the money. Look up VOO here in the search bar. You go to VOO. So you want to hit a buy order, you can buy here. So if you see here where it says estimated quantity 0.1812, that's because it's not a full share. But now let's do 552. That's almost more than a full share. So that's how you know you're getting a fractional share or a full share. 100, that's $100. Fractional share, review order. You hit review order and you just hit buy. Right? So, and now I would say your market value. Just now, I lost 1 cent. So it went from $100 to 99.99. There you go. Money is already working for you. So right away, your money works for you. That's how you do it. You don't even have to wait. Steps, if you want to screenshot this, here are the steps to invest your money into Robinhood. You download the Robinhood app. You create you a free account. You link your bank account. You deposit $100. You search for VOO in the app search bar. You tap trade. You select buy and enter the amount you want to invest, like I just demonstrated, $100 or less. Right, and you swipe up to confirm your purchase. That's if you're doing it on the computer or doing it on your phone. You would swipe up, right? But on the computer, it already confirms for you. So, just a few minutes, you can make your first investments and officially become an investor. You see how quick I just did that, right? So now I'm an investor. I'm down 2 cents, right? 0.02%, right? My money is working for me now. That's how easy it is. Consistency is key. Right, so investing isn't about getting rich overnight. It's about building wealth over time, right? Plenty of investors, if you look and one of these videos, I'm gonna go back. We're gonna look at the top investors and see how they started, right? Plenty of investors, they didn't start with a lot of money, right? All they did was consistently invest over time, and it grew to a lot of money. So investing isn't about getting rich overnight. It's about building wealth over time. If you make investing a habit, like adding $100 monthly to your portfolio, it will grow exponentially, right? And this is just an example with VOO. Investing $100 each month into VOO could grow to over 19,000 in 10 years with an average return of 10%, right? Once again, these are low scale numbers. $100, you can definitely find you a way to invest $100 a month, right? 10% is on a low scale. This year alone, that's why they say average. They just take the averages of every single year and put it together, right? But this year alone, 32% year to date. It's not about getting rich overnight, like I just talked about. It's just about staying consistent, right? You put your money over time into VOO, right? You make your first investment into VOO. I suggest that, and then we will venture off into the companies, right? We'll venture off into Amazon's, JP Morgan's, Apple, even Walmart. All these top companies. If you want to understand the Robinhood platform, get on the Robinhood platform. We're even going to talk about where to put your first $100 into crypto, all these things, right? So this is where I would put my first $100, and where I did put my first $100 when I first began investing, right? If you're somebody who wants to get started investing, but you think you need a lot of money, which you do not, you can start with $100. Watch this video, take your $100 and put it to VOO. That gives you diversification into the whole stock market, basically, right? And you don't even have to start with $100. This same method and this same investment can be made with $1,000, $10,000, $100,000. I'm just telling you guys where I would suggest putting my first investment into the stock market if I am somebody who is a beginner and this is new to me. So with that being said, I appreciate you guys tuning in. Subscribe, follow me on Instagram at The Official GoGetter, follow me on TikTok at The Official GoGetter. We got more videos coming on the way. If there's any questions you guys got, reach out to me. And do something your future self will thank you for, starting today, right? Because that's all it's about, man. Because here's the thing. You get on yourself about not having a a certain amount of money about investing, or you feel like you can't invest because you don't have a certain amount of money. But here's the thing: if you don't start now, right, and you look back 3 months from now, you could have, if only you have is $100 or $50 to invest. In 3 months, you'll have $300 invested into your portfolio, which is way better than you having zero and still feeling how you're feeling now, which is waiting to start and waiting for that perfect moment, which is how we always get ourselves caught up in where we don't want to be because we are waiting for a perfect moment. But if you just start now, right, invest $20, right, $30, $40, 100,000, whatever it is. We need to understand this game of investing so we can keep up with the economy and beat the economy, actually, right? Because things are getting serious, and this is not something that, this isn't, yes, I know this skill and I'm teaching this skill, I can monetize this skill, right? But I don't want this to be something that is only second nature to me, right? I feel like this is just as well as we know how to save money, right? We need to know how to invest money just as well as saving money, because both go hand in hand. If I'm being honest, investing is more important. So you see me starting, I really just want to be a motivation and an inspiration, right? You see me being a young man, 21-year-old, doing this right now and putting myself in a position so I can be in a better position by the time I'm 31, right? But if you're somebody who's 31 and wish you started doing what I was doing at 21, you're getting on yourself for no reason, because you can be where I'm at, or you can be in a way better position at 41, right? Or if you're 41, you could be in a way better position at 51, right? So it's all about starting and planting that tree, right? Because you hear the quote, the best time to plant a tree was 20 years ago. The next time to plant a tree is now. So plant your tree now, because I'm demonstrating this, and I'm going to do more demonstration so we can wake up as an economy, and so I can inspire you guys to just do more, right? You don't have to watch my videos and learn from me, right? The only thing that I want to show you guys here is the fact that I'm taking it serious. I know what this is, and you should too, right? I've done the learning. I've done the due diligence. I've invested the money. I've gone through all the hard parts. All you have to do is do it, because sometimes, and it took that from me, sometimes all you have to do is see somebody else that looks just like you, or see somebody else that's in a similar position as you, to just start, because it's not far-fetched. You don't need to be Warren Buffett to invest in the stock market. You don't need 100,000 to invest in the stock market, right? Because I guarantee you, they didn't. The top people who are investing right now, they didn't start with thousands of dollars. So, with that being said, I'm out. That's the end of the video. That's that.